Welcome back, everyone, to another super exciting trialogue on FinTech, RegTech, and SupTech. What they mean for financial supervision. Without any further ado, let me welcome our moderator for the session, Ms. Sharmista Appaya, Senior Financial Expert, World Bank Group. Now, our speakers for the session, Ms. Jo-Ann Barefoot, Founder, Alliance for Innovation Regulation, and Mr. Arif Ismail, Head of FinTech, South African Reserve Bank. I would request all the delegates to keep posting their questions in the chat box, and the panel will address a selected few at the end of this session. Over to you, panel.
Thank you. Thank you so much, and we're really glad to be here. We're joining you from across 3 different time zones. I'm in India, Arif is in South Africa, and Jo-Ann is joining us from Washington, D.C. So welcome to FinTech, RegTech, and SupTech and what they mean for financial supervision. There's a lot of text in that sentence, and we haven't even started on GovTech yet. So we all know that FinTech is at the heart of the new economy. Now, digital disruption is not new. We've been able to order food, movies, and even cars at the touch of a button. But it's quite different when it comes to the financial sector. And it's different because it has larger macroeconomic impacts. It can affect financial stability. It can affect integrity. And very importantly, it can affect consumer protection. So regulators are beginning to find themselves in this dilemma about finding the right balance and about fostering innovation so that they can keep up with their peers. And the COVID-19 pandemic has made this situation much more urgent. We are now faced with a situation where we have much less physical interaction. We're all moving to the digital realm. And FinTech can also help with business continuity and stopping those business interruptions. So to help me unpick some of these issues of FinTech and how regulators are meant to deal with them, I have 2 esteemed guests with me who I want to introduce. Arif Ismail is the head of FinTech at the Central Bank of South Africa, and he leads on a number of FinTech issues, including their work on central bank digital currencies, their work on crypto assets, as well as starting up the Innovation Hub and Sandbox in South Africa. He represents South Africa at the BIS and the FSB, and is also the co-chair of the Intergovernmental FinTech Working Group, which is, I think, one of the best examples of inter-regulatory cooperation that we have seen globally. We also have Jo-Ann Barefoot with us, and she is the CEO and co-founder of the Alliance for Innovative Regulation. But she's had a number of different hats over her long career journey. She's been partner at KPMG, a senior fellow at the Harvard Research Institute, and she has also been a co-chair at Trialogue. She's also started a number of startups, and I think quite recently, Hummingbird, one of your startups, has just got $8 million on your Series A funding. So congratulations on that.
Thank you.
Before I pass the mic to Arif, I just want to invite the audience to please post your questions, and we will try our best to get through to all of them before the end of the session. So thank you, and hopefully you enjoy the presentation. Arif, all you.
Thank you so kindly, Sharmista. It's an absolute delight to be here, a privilege and an honor to share some thoughts. I think the presentation, if you could pull it up, the presentations is not long, it's just a few slides. I started reflecting quite carefully on the topic in itself, that's the theme for the session. And as you captured it, Sharmista, all the techs, FinTech, RegTech, SupTech, and what does it actually mean for supervisors and regulators? And I want to kind of put out my punchline right up front, that I think, that the main takeout for supervisors and regulators is going to be that we're going to have to collaborate a lot more. And that's the main takeout. That's what it means for us, these kind of phenomena that we're experiencing. And it's probably important, as you captured, Sharmista, to kind of reflect on why. Why is it so important for regulators to collaborate? If you could skip to the next slide. Why is it so important for regulators and supervisors to collaborate? As you pointed out, this innovation that we see in financial services is not a new phenomenon. If we think back even 30 years or 40 years ago, innovation in financial services has always been around. But why now? Why do we have to collaborate? And so resiliently, so importantly. I just want to see that there we go. So if I skip to the next slide, what I'd like to do is position 7 reasons as to why I think the FinTech, RegTech, and SupTech phenomenon actually propels collaboration amongst a set of regulators. And the first reason that I kind of reflect on is that, although innovation has always been part of financial services, my sense of it is that the ecosystem, the financial services ecosystem, is becoming far more complex than anything we've ever seen, and especially over the last, let's say, 10 to 15 years. If I just pick 3 quick examples, if I think of money and the movement of money, usually we kind of, absolutely rely on clearing and settlement mechanisms, whether that's a switch or whether that's a high value payment system. And when I think of things like Bitcoin, Litecoin, Tether, Ether, and so on, I now start thinking about this and thinking, oh my word, money can move around from one end of the world to the other end of the world in a few seconds without too many intermediaries in between. But the interesting bit for me is that some of these innovations that we're seeing, like, vanilla Bitcoin or stable coins as it emerges, the kind of architecture that it brings, the kind of technology that it puts forth, is actually startling for regulators. We've got to grapple, we've got to put our minds together as to what the regulatory framework is. And my sense of it is that the system is just becoming more and more complex, whether from a technological perspective, an operational perspective, a legal perspective. It's just becoming far more complex. And maybe the important bit here is that it's not just payment systems that are becoming complex. If I just think of the 5,000 odd online peer-to-peer lending platforms in China, and again, the grapple that the regulator had with what's typically now thought of as internet finance, it's just a signal again that this ecosystem is very complex. The second thing, though, that's quite revealing is that innovation in the past, predominantly would continue to be incumbents, banks, insurance companies, etc. And our sense of it is that that's no longer the case. That if we look at, the kind of new players, fintech firms that are coming into this domain, they're quite important in shifting the domain. But these are entities that are typically not regulated entities. And that's why regulators have got to collaborate and keep on top of what's going on. But of course, it's probably now cliche to say, Shamista, that the pace of change has never been anything that we've seen before. And the kind of examples that we're seeing emerge in the innovation domain is nothing like that of the past. But importantly, I often say this, that, what is fintech? Fintech is not just the technology that underpins innovation. As we reflect on the kind of innovations that are happening in payments, digital savings, investments, insurance, and payments, of course, it spans the entire financial service. And that's important for me is that many of the products that we're beginning to see, actually are borderless. These products and services can be issued anywhere in the world, and consumers, can consume them. But the important bit, I think, is that if I just reflect on the scale and the speed at which services can scale, if I just take, for example, Facebook and perhaps WhatsApp Pay and Tencent, in 2009 there were probably just about 100 million active users of Facebook. But if you contrast that to just 10 years later, you've got 2.7 billion users, from 100 million to 2.7 billion active users. And that's probably what 50% of the adult population. And, again, the same with Tencent, started off with about, 300 million active users in 2009 and have now scaled to 1.8 billion users. And of course, given all of these changes, my sense of it is that regulators have got to be as close to the innovation as possible, but they don't just need to collaborate with each other. Strangely enough, our sense is that we've got to collaborate, with the market, being conscious again of regulatory capture, but being as close to the innovation as possible. The question then is, if that's the case, and if innovation is moving at the pace, that we see it with new fintech players coming on board, spanning the different financial services, etc. How do we do that? And I want to skip to the next slide and just give you a little bit of a story of what we're doing in South Africa. So in South Africa, we've kind of agreed as a set of 6 regulators: the credit regulator, the conduct regulator, the central bank, the tax authority, the financial intelligence authority. We've come together and we've said, well, given these changes that we see, what we think we need to do is get really close to the market. And the way that we thought of doing this is to put together what we call an innovation hub. The innovation hub has 3 components to it. It's a guidance unit where innovators can register their queries with us. And our commitment to the innovators is that we will respond within 5 to working days and give them a comprehensive response on the innovation query. The second aspect is of course, now very common across the globe. We've put together a regulatory sandbox. We've just launched it a month or so ago. There's been a number of applications in that domain. What we're excited in seeing in the sandbox is innovators challenging the law and asking for a shift to particular regulatory frameworks where they think it might be archaic or outdated, and to challenge the law. Some of the examples that come to mind there is index insurance. We've also seen a lot of crypto payments, people wanting to see the ability to pay with your cryptocurrency for basic services like buying a meal, etc. And we've also seen a lot of applications around open banking. Fintech firms very curious and very keen to get their hands on bank data, customer data in order to offer services, etc. And lastly, we have something called an innovation accelerator where we could run proof of concept, proof of value with the market in order to stimulate innovation. What I'd like to do is maybe just give you 2 quick examples of the type of collaboration that we have under crypto assets and something that we call Project Coca. But before I depart from this slide, I'd like to just maybe suggest some lessons learned from the guidance unit and the sandbox in particular. On the guidance unit, one of the things that's stood out for us quite importantly is that when fintech firms come to talk to the regulator, we encourage them really to just think very carefully about the strategic communication that they have with the regulator. Instead of selling their product as such, what they've got to draw out for the regulators is what challenges they face from understanding the regulations or from stretching the regulations. And that's quite important. And the suggestion there is get straight to the action, put down your perspectives for the regulators, make it clear for them what kind of guidance that you're looking for. Remember fundamentally that regulators are not looking to buy your product. They're looking to product to market. And the same kind of example on the sandbox, I think in terms of the applications that we see coming into the sandbox, be very clear about the law that you're wishing to change or the regulation that you're wishing to change, and be as explicit as you can with the regulatory community. So I'll conclude by giving you 2 really quick examples of how we're collaborating in the structure. Let me turn to the next slides and I'll go through it quite quickly. The next slide just talks through how we've gone about our crypto assets journey and the importance of the regulator working very closely with the market side by side, understanding the use cases that are emerging. We've unpacked in the South African domain that there are 5 use cases that we needed to look at. To give you a quick feel for it, one of the first use cases was how do customers leverage crypto asset service providers in order to invest in these crypto assets. A second case that we saw is where crypto asset service providers are providing the opportunity for people to use their wallets in order to transact at retailers and at fast food chains, etc. A third use case, could be buying. A third use case would be, the ability of innovators using crypto assets in order to raise funds in the market, etc. And what we've managed to do in working very closely with the market is, together with the regulators, put together the kind of risks and benefits that are underpinning the particular use cases, go out with a consultation paper, get feedback from the market, which is not a typical process for a regulator. We normally like to sit in a corner, analyze the use cases quite carefully, and only when we get our minds around those particular cases, then only do we put these particular papers in the industry. This time around, what we did differently is put the policy paper out for comment, get really, really rich feedback from fintech firms, including crypto asset service providers, which help us build the regulatory framework. So this is just a quick example of how important it is for regulators to work very closely with the market, stay as humble as possible, understand the underlying risks and technologies, understand the benefits, and then put together in rapid time a regulatory framework. Normally, this would take us about, usually, 2 to 3 years to put together. We managed to do this in under 12 months, which is a signal of the benefit of working closely with other regulators and closely with the market. If I skip to the next slide, then just from the perspective of, I'll just cover the main recommendations. What's come out from this process, richly, is that, the issues around anti-money laundering and financial terrorism is quite important. That was one of the major recommendations that has come out. For crypto asset service providers in the South African domain, they now have to register as accountable institutions, very similar to other financial institutions. That's one of the major recommendations. The second one is we're going to declare crypto assets as a financial service, which brings it into the regulatory net. The third recommendation that we've come up with is just a recommendation around crypto asset service providers registering with the central bank so that we can monitor the flows into crypto and out of crypto. And of course, we're then going to put a monitoring program together in order to keep close to the transition of crypto assets. I'll skip the next slide and maybe just give you a feel. Maybe I'll skip this one. I'll give you a feel for one last project that we've been working on. And again, a signal of the regulator desiring to keep very close to the market. This was a project that we ran very similar to other projects we've heard of across the globe, like Project Ooh, Project Jasper. This was a project that we ran called Project Coca. And the point of this project was to see the benefit of tokenizing and putting it on a blockchain, and for the market to be able to explore together with the central bank what the potential is of tokens on a blockchain. The biggest thing that we took out of this was that, the tokenized network can pretty much mirror the high value payment system that the bank runs at present. We managed to fulfill all the operational requirements that our current RTGS actually fulfills. And the benefit of this is that, again, the regulator keeps extremely close to the market, stimulates innovation by producing these kind of proof of values. And I'll conclude on the last slide by saying, we're about to journey along on Project Coca 2, where we're going to take a debenture. We're going to couple that with a wholesale central bank issued digital token, as well as a privately issued token. But maybe my thought would be, that it's absolutely crucial for regulators to keep as close to the market, create the market in terms of innovation. My line through this entire presentation. I'll pause there very quickly. Thank you so much for the opportunity.
Shamista, shall I start in?
Sorry. Thank you so much for that, Arif. I think it was really interesting to see the scale, the pace of change, the complexity, all of which I completely agree with. And I think important points to take away is to say to the innovators to go away and do their homework and actually understand what and where in the law that they need some changes, but also to remain humble as a regulator. I think those are some really, really important lessons for sort of, innovators and regulators who are probably listening in. So Joanne, we understand, and I guess we've heard a lot about FinTech now, but we maybe having delved too much into SupTech and RegTech, both of which are really important and sort of vital to dealing with sort of the vast quantities of data as well that we are faced with. So over to you to tell us a little bit more about your work in this space and your thoughts and how we're responding to COVID. Thank you.
Thank you. And thank you so much for that presentation, Arif. I think it illustrates what a lot of us believe, that FinTech has the potential to transform financial services and make them better for people, more inclusive, more accessible, easier to use, and so on. And whether we succeed in capitalizing on that opportunity is going to depend a lot on how well we regulate FinTech. So that throws the question over to the RegTech arena. I've spent my life in financial regulation, both as a financial regulator. I was deputy controller of the currency in Washington years ago, and then as a consultant, and now at a nonprofit. And I am happy to say I think the entire field is on the brink of massively better ways of working. If we think about the lessons that we've been learning from the COVID experience and the harsh reality of understanding the nature of an exponential curve of change, when you have change that is doubling and redoubling and redoubling, it takes a shape that looks gradual for a long time. It can be deceptive because it seems like the trend line is gradual change, and then suddenly it spikes upward. And if you don't keep up with that, if you find yourself under that curve, you can't catch back up. This is the same shape of technology change, and now it is the shape of regulatory change in our community, because we are suddenly coming to a tipping point where regulators all over the world are moving to embrace RegTech and supervisory tech or RegTech. And we know this is going to happen partly because it has to, in order to keep up with the fact that the financial industry has been digitized and is moving faster than ever and is more complex than ever, as you said. And we also know it's happening because it's already happening. Regulators all over the world are embracing an aggressive agenda on this. So if I could go to my second slide and talk a little bit about what RegTech is. The term RegTech is used in two ways. It's kind of a young field. It evolved really because I think the advent of new digital technologies attracted a lot of modern tech people into the financial space. And a lot of them, when they got there, looked around and sort of said, we could do a better job of how we regulate this field. And so people started to form RegTech companies. Can you bring my slides up? I can speak without them if need be. So people use the term to mean both technology for compliance, for the industry to use to comply with regulatory requirements, and then also RegTech for regulators, which is very often called SupTech. Go back one slide to the one you were just on. There you go. So RegTech for regulators is often called supervisory tech or so-called SupTech for particularly for bank regulators. And while the compliance tech is sometimes called comp tech or comply tech, one of my messages for you all today in this audience is that we need to understand that this is all an integrated set of changes. FinTech, RegTech, and SupTech are all using the same data. They're using the same technology tools. And I think it's going to be really critical to integrate them into one technology that can become interoperable, which I'm going to talk about in a few moments, because the big opportunity in this whole space is to begin to build really interoperable systems that can work together. The advent of these technologies is driving transformation by regulators all over the world. I will be careful about naming countries because if I start a list, I'll be leaving out a lot of examples of great innovative technology, including what you were just describing, Arif. But I would point in particular to the UK. Sharmista, I first met you when you were running the FinTech Accelerator at the Bank of England and the Financial Conduct Authority in the UK yeah, has definitely been at the forefront in thinking through how to innovate as regulators, as opposed to just looking at the innovation underway in the industry, and how to organize and change culture and change structures and change the core functioning of the agency. The former head of RegTech at the FCA is, you can, that's okay, is Nick Cook, and he is now elevated into running a full division there, which includes RegTech and supervisory tech. It includes the FinTech innovation hub and sandbox, for which they're so well known. And it includes data scientists in his group and all around the agencies. Altogether, there are about 400 people doing this work there, most of whom are data scientists, and it's a transforming of how they do their own actual work. And they use RegTech as the umbrella for the RegTech and SupTech. Many other countries have moved as well, though, including in the United States. There are a lot of initiatives underway. So if we go to the next slide, and I'll just touch on this very quickly so we have lots of time for questions, but these developments are driving actual innovation around specific use cases all over the world in both the public and private sectors. And I just want to call out two of them from this list here. The first, and Arif mentioned it, is there's a tremendous amount of work underway globally on anti-money laundering and financial crime. That's partly because there's high consensus that the way we are attacking those issues today is failing. Many of you have probably heard the UN figures estimating that there's at least $1.6 trillion in annual financial crime rising still, and that we're catching less than 1% of it. And that there are a lot of reasons for that, but one of them is good technology is available, the criminals use it, but the regulators and law enforcement have had trouble being able to put it to good use for a lot of reasons. And so we're using old analog technology on the side of law enforcement and regulation. The FCA has been one of the leaders in tackling this problem. They invented a regulatory methodology called a tech sprint, which is basically a hackathon for regulators. And they've held two huge tech sprints on anti-money laundering. The second one was last summer, and my nonprofit, AIR, ran a US arm of it, also got many US regulators and others involved in it. But this is beginning to hammer out what are the tech changes that would be needed to equip the regulators with the data they need and the analytical tools, the AI and machine learning types of tools, to find these big patterns of global crime, which are hidden now because our tools are so fragmented in the complexity that Arif was talking about. The other example that I want to call out is regulatory reporting. This is another area where there's a lot of consensus that the tools that we use today are insufficient, and especially in the pandemic. The pandemic is roiling the economies all over the world, the financial systems all over the world, and regulators are realizing that they're sitting here with a mandate to keep markets healthy and financial stability in place and to protect consumers, and that they don't have enough information to know what's really going on. They have big blind spots because they're relying on periodic reports, lagging reports, partial reports, sampling of data, and so on. And so there are at least 4 initiatives that I know of around the world. If others know of others, I'd love to hear about them. But the FCA has a big mature project going on digital regulatory reporting. The G20 has launched a global tech sprint, which has this as one of the 3 use cases. I'm a judge in that, very excited to look at the quality of the entries. Here in the United States, the FDIC just launched a project on this, and there's another one that I know of that's not public. So thinking about how are we going to get regulators with real-time information, complete sets of information, and information in digitized form so that the regulator can call it as needed and analyze it using sophisticated new tools. And part of this also is a vision to make some kinds of regulatory reporting potentially machine executable, that regulators could issue a new rule or requirement in the regulation in the form of code that the industry could plug in and it would come back immediately. I am about at the end of my time. I just want to mention that we have at our nonprofit just put out a document that we're calling a RegTech manifesto, which is on our website at regulationinnovation.org. It's an RFC. We're hoping for comments from people all over the world on how to convert the regulatory system to a digitally native design over the coming years. And we're also launching something we're calling the Regulatory Design Project, a public-private partnership. If we can get all this done, we can have the financial sector working as everything else does when you digitize it. When you digitize things, you make them better, faster, and cheaper, all at the same time. And you can also get onto a basis where we can continuously improve what we're doing and have an easy ability to update and not be stuck in old technology, old vendor walled gardens that are rigid and can't be changed, all the things that keep regulation from being nimble and able to keep up. And the same is true on the compliance side. So it's an exciting moment.
Thank you very much for that, Joanne. I think we've talked as well about having a tech sprint with the World Bank, and we've talked about some use cases like AML CFT, and I think hopefully we're going to take a lot of our learnings from sort of the work that you do with the G20 as well. It's also interesting that you talk about data and about data being at the heart of most of these things. And Arif and I were just actually having a conversation last week about the need for data and about the need for having sort of dedicated units potentially that work on sort of analytics and work on AI. And the other interesting thing that I thought you talked about was the tipping point, the fact that all regulators are probably going to have to adopt SupTech and RegTech soon enough. And I was just reading something from, I think for the European Parliament, that the Parliament was asking that all sort of their member countries actually embrace SupTech and start working on almost cross-border SupTech solutions as well. So thank you for that. Really interesting comment. We have some comments and some questions from the audience, so maybe I'll start off with that. Speaking about just some of the, the RegTech and the tech sprints that we just talked about, one of the questions is, are there any prominent use cases on AML CFT that you've been seeing, especially after COVID? Joanne, if I could direct that to you.
So AML CFT have a lot of complicated problems in them to be solved, and I think we're seeing solutions across the board. There's a great deal of work going on in the Know Your Customer and customer identification issues, both which, by the way, are blocking a lot of access for people to relief funding in COVID because new customers have to be vetted, and we all know it takes a long time to do that with traditional means. So we're seeing a lot of private and public interest in how to expedite identification or stratify how by risk how things need to be done. There's also tremendous momentum that's accelerating in the pandemic on digital identity. The U.S. Treasury is working on this. FATF, the Financial Action Task Force, is working on it, and partly for the same reason, how to give more people access. There's also tremendous activity in privacy-enhancing technologies that can enable regulators to share information safely across borders and throughout their industries without compromising the privacy of the people involved. There are a lot of techniques that are emerging there.
Yeah, thank you for that. I think we've seen that with sort of the pandemic. FATF and sort of the topmost sort of AML CFT regulators also supporting the sort of much more higher move towards digital. So there's a lot to be done in that space. Arif, if I could turn to you and say, so you've got your hands dirty by sort of working with technology, but there's obviously been a lot of work that's been done already by regulators sort of around the world. Would you recommend that regulators do a lot of work themselves to sort of trial and test these different methods, whether it's sort of in the sandbox or the innovation hub? Or do you think they should sort of depend on things coming out of the standard setting bodies and other regulatory bodies around the world?
Yeah, that's a great question. I think I'd like to maybe couch it as the power of the and. It's probably doing both things. So I would think that we need to leverage the things that are coming out from our fellow regulators, standard setting bodies. Do is customize it and stretch, whatever findings they have, and then get our hands dirty and contribute to the body of knowledge by actually getting our hands dirty. Just to use the example that Joanne was mentioning around the ability to share data but still protect, the confidentiality and privacy kind of concerns with data. I mean, we would not have understood, the power of that technology if we didn't play around with Project Corca by using things like Pedersen commitments and Istanbul Byzantine fault tolerances. We just would not have understood it. So I say it's a mixture of the two. Leverage what others are doing, but at the same time, keep playing on your own to keep stretching the domain. Yeah.
Sharmista, if I could just add to that really quickly, I think you have to get your hands dirty. You mentioned that I co-founded a RegTech firm a few years ago. I'm not active with it now, but I learned more from that experience from working directly with tech people, engineers, and designers than I've learned in all my government meetings put together. It's so helpful. Work with people who know how to write computer code. That's a nice shorthand for it.
Yeah.
And, so sandboxes, tech sprints, to the point that Arif made earlier that collaboration is the key. Regulators have to speed up, as he described, and there's two ways to do that. It's more experimentation, small scale trying things, and secondly, as he said, collaborating much more widely. That accelerates the ability of regulators to figure out what to do and get it right.
So you would recommend that most regulators sort of get their hands dirty, and this would potentially help us to be more agile because, as we all know, regulators are not known to be agile and sort of moving around as quickly as sort of innovation catches up with them.
Yes, regulators are going to have to become agile. Yeah.
So Arif, one for you from the audience. It was obviously really interesting to see that you put your cryptocurrency consultation out to public to actually try and understand what the industry thinks. The question is that certain banks have allowed holding and use of cryptocurrencies, while some have completely banned them. And what is it that's happening in South Africa from your experiences, and what's your views on cryptocurrencies?
Yeah, so that's a great question again. What we found is exactly the same, that in the absence of any policy or regulatory certainty, some banks have the appetite to continue, understanding that the frameworks will get put in place, and others don't have the appetite for that and don't want to engage with the crypto asset service providers. At this stage, we've said to them as transparently as we can, look, here's the policy paper, here's the framework that we're thinking about, but at this stage, it's their decision in terms of their risk appetite as to engage or not. So that's been our experience. It's very similar to other jurisdictions in the world.
And do you think at some point that you'd want to make a decision on it? Because I know this is something that we as the World Bank as well, working in a number of countries, they come to us and say, how do we deal with this? And obviously there's so many nuances in it. A lot of people follow the Howey test. Is it a security? Is it is it a token? Do you think that there is a potential to actually categorically make a decision, something similar to the Howey test, or are you leaving that open to sort of a bespoke case-by-case basis for now?
Yeah, so I think I probably went through it too quickly. We've kind of identified 5 very specific use cases involving crypto. One of them will be ICOs and then applying, the Howey test and so on to security tokens in particular. But So some of them, like the ability to invest in an asset through a crypto asset service provider, we're pretty clear about what that regulatory framework would be. But when it comes to some of the other use cases, I'll just pick two very quickly. The one is, what happens if it's a bank that wants to offer custodial services, right? This is a typical investment bank wanting to offer custodial services. Is that use case clear? In our jurisdiction, we've now made it clear what those conditions are for which a bank could offer those custodial services. Very similar, I think the OCC have just released today similar comments around, yes, banks can go ahead and offer custodial services under these conditions. So I think it's dependent very much on the use case and the amount of certainty that the regulators bring to those particular use cases. To finish off, if I think of crypto payments, micropayments, what we've said in our jurisdiction is, we're not clear about the regulatory framework at this place. Please come join us in the sandbox. Let's test together as to what the framework needs to be.
Thank you for that. So just building on that, and something that we internally as well as the World Bank have struggled with, is that there isn't obviously a standardization for fintech. There's some standards and principles for things like market infrastructures or for digital payments, but there's obviously nothing for fintech because it's broad and because it's quite hard to. Do you think that there is appetite, or do you think there's even a reason to create standardization or standards or principles for fintech? Maybe I'll address the question to both of you.
Yeah, I'll respond really quickly. So my take is, we must keep to the mantra. We must go back to looking at the underlying activities, and this might be wrong language, but standardize our regulatory thinking to create level playing fields around those activities. But standardizing is far too broad. That's my take, Joanne.
I agree with that. And I think it's one of the most important questions, because we do need some standardization in this whole system that's going to promote interoperability and make it easier for what a fintech is doing to be evaluated, to go across borders, and the same with banks and incumbents too. But there's so much risk in standards of creating, locking in older ways of thinking, incumbent technologies that sort of get a preferred positioning and then you can't get beyond them and so on. So I think that this is an issue that really needs to be worked on. And I think part of the solution to it is that a lot of what we do in the regulatory space should be being developed in an open source framework. This is new to financial regulation. It's the bread and butter of the tech world. We need to take a lot of proprietary code and regulator-specific code and turn it into open source that can then create transparency and interoperability in how regulation and compliance are done all over the world, and can be built upon, can be vetted by the community. This is going to be one of the secrets to unlocking good standards that can also remain flexible.
Thank you very much. I think there was, lots of insights there. So maybe we only have time for one very last question, and maybe if I ask you to limit your answers to tweet size, as Arif said before. There's quite a few private sectors listening into this conversation. So what would be your one piece of advice for private sector companies? So one of the questions we got from the audience was whether supervisors would actually be open to SupTech solutions. So what is your one piece of advice for people who come to you with questions like this? Joanne, if you could go first, and then we'll do 10 seconds on Arif. Thank you.
So this isn't a complete answer, but it's something we haven't touched on. My advice to private sector is to get into the cloud as fast as you can. You're going to have to be in a cloud computing environment to take advantage of this digitization opportunity. So go there and then start transforming how you do things.
Yeah, my quick reaction would be, don't be afraid, push the boundaries.
I love it.
Fantastic.
Thank you so much.
Thank you both very much. This is a very interesting session, and I think we've all realized that FinTech is here to stay, and there's a lot of potential for collaboration between the regulator and the innovator. Over to you. Thank you.
Thank you
Thank
so
you.
much to all the speakers and for such an amazing conversation. Dear audience, do stay back and check other sessions going live right now in the parallel halls. Thank you.